Good morning, everyone, and welcome to the European crossover webinar. And we're still seeing the euro pretty strong up here. I mean, it's holding up close to this 116 area. We'll pop it in here. So we're still pretty close up to here. We've come up and almost tagged into the 1608, and we'll get into the analysis. I just want to go and touch on that quickly. So you can see here that 1608, a lot of volume in it, but there's a little bit, if you push up, takes it up to about 1625 right there, just a bit here. Also, you see that line right there, and just some touches right there. Comes in around that 1625, so I'm still thinking that it'll push above 16 with a little bit of gusto, and then potentially pair back. Speaking of pair back, I've done the analysis. During the Asian session. Actually, a little bit late. It was late Asian session, but anyway, nonetheless, if you look at the cable, we formed a hanging man yesterday. So, be interesting to see if maybe we do get a little bit of a pause back. But yeah, hanging man running right here into this level here, 2742. We'll get into all the analysis, but just thought that was interesting here. You see here, silver still poking along. This market just moves just way too fast. Um, I took a hand in it day before yesterday. I made a couple of nickels, but man, that during the early part of the U.S. session, I saw it fade 60 cents. No, 50 cents in 2 minutes. No, I can't trade that market. No, I was happy to come make a couple of nickels, but if I'll trade anything, I'll just go in and trade the gold. This market is just wacko fast. Bear with me. Dollar index is taking another dip again. We had recovered. I think that was actually the bias chart support for yesterday. I had actually lowered it, but I think that was a bias chart for yesterday. 94.77 looks like the low is 78. Take a look here. Yeah, that was it. 94.77, and that was for yesterday. And we have hit 78. Obviously, if the euro can poke its head above 116, that will lower it. So adjusted that. Let's go and take a look at the economic calendar. We did have German GFK consumer sentiment came in a tad bit weaker. Still, I kind of, it's hard to gauge or put too much stock, better yet, to put too much stock in some of these numbers because of the way the coronavirus, and it's kind of swung back and swung this way. But anyway, nonetheless, Reuters poll was -5, came in at -3, obviously a little bit better. French business climate, Reuters poll expecting for 85, came in at 82. We do have CBI trend orders for UK data. That'll be at 6 a.m. Eastern. I'm in Central, so hence the number here. And of course, at 8:30 Eastern in the US, we'll have our weekly jobless claims numbers. Obviously, it does have some impact with we swing back and forth with unemployment numbers. Um, and at 10 a.m. Eastern, we have leading index as well as Eurozone consumer confidence flash number. Then a very low tier number at 11 a.m. shows Kansas City Fed manufacturing, exceptionally low tier. But this will be interesting here. Eurozone consumer confidence flash number. Reuters polls for negative 12. The par was negative 14.7. And we'll go and take a look at what's happening here in some indices. Take a look here at the NASDAQ. Kind of bounced back up here. So we're just below this key area, which I think was, let's go and mark this off here. 10,951. We're kind of hanging around here. We had that big move up in here at the beginning of the week. Then we rolled back. And yesterday it looked like the market wasn't sure what it wanted to do. We did get some good numbers out of Tesla, and I think we're kind of holding up in here with as earnings data comes out. I have to take a look for today. Bear with me. So for Thursday, we have Twitter, Intel, AT&T. See if I can pop this up a little bit bigger. Okay. So Twitter, AT&T. I don't see anything of any real significance. I mean, there's Dow, but E-Trade, but not any real significance I see. Unlike yesterday when we had Tesla, Biogen, Microsoft. So it'll be interesting to see how they trade them today. Southwest Airlines. May have just not dodged, but gotten past the key ones. That being said, we're still on the bid here. Take a look here on the NASDAQ. Looking at the SPOOs. Boy, we are still clipping here in the SPOOs. I hadn't paid much attention to it. Look at this. Holy smokes. The 33.75. We're still a little ways to go. Let's see, right there. Right there. Oh, we're just about there. That is a key level there. And that would come in at 32.92. Still clipping along here in the SPOOs. And just a quick look on the Dow futures. Coming to some key level right there. 27,008. Let's see here. Good level there too. 27,034. Although I don't track the Dow much anymore. Okay, and with that, we'll go on and take a look at the news. My tweet deck went down. Hang on. Yeah, it's still down. But I did happen to get a couple of stories out before it went down. So the Australian dollar holds gains, but bonds unfazed by the budget carnage. The Australian New Zealand dollars paused on Thursday, having already notched up hefty gains for the week, while Australia's government confirmed just how much carnage the coronavirus had caused to its budget finances. The Aussie was taking a breather at 71.37, having climbed 2% so far this week to touch a 16-month peak at 71.84. The next barriers are the April 2019 highs of 72.06. The Kiwi stood at 66.64 after stretching as high as 66.89, ground not visited since January. As widely expected, the Australian government revealed its budget deficit blown out from the zero to almost 86 billion, 86 billion, which Aussie dollars, which is compared to US dollars 61 billion. Gross debt was forecast to balloon by 168 billion to 851 billion by mid-2021. That would still be low by developed world standards and would not on its own threaten the Australian's AAA credit ratings at S&P Global Ratings. The agency did warn that it might cut the rating should COVID outbreak cause more economic damage than expected, and noted that the recent outbreak in the state of Victoria was a concern. Markets took all the red ink in their stride, given that government was having no trouble funding its debt and strong demand for bonds at home and abroad. A regular tender for Aussie 3 billion in Treasury notes on Thursday drew bids with 18.2 billion. A new 2051 bond will be sold by syndication next week. Most of the interest for the bonds is likely to come from offshore interest, said Prashant Nuwantha, senior Asia Pacific strategist with TD Securities. The bulk of the offshore investors are likely to be the liability-driven accounts that seek longer duration assets to be more closely matched to defined benefit commitments. And the dollar slides as Sino-US tensions escalate. So the dollar crept off milestone lows against other majors on Thursday and held on to the gains against the yuan as heightened Sino-US tensions kept currency markets cautious. The United States gave China until Friday to close its consulate in Houston amid accusations of spying, and President Trump said it was always possible other Chinese missions could be ordered to close as well. China has vowed to respond, and the escalation in tensions between the world's two largest economies sent the yuan in its sharpest slide in nearly 2 months. The euro sat at 1580, above 2/10 below a 21-month high of 1601. The Aussie pulled back from the 15-month peak and drifted around 71.51. Moves were slight and volumes were lightened by a public holiday in Japan. The market's still trying to ascertain whether there's an increase in geopolitical tensions is going to be enough to derail the positive vibes been seeing, said Rodrigo Cottrell. Recent history will tell you that the market will tend to digest this stuff and carry on its merry way, but a bit of caution is warranted, and the yuan moving higher is probably the canary in the coal mine that we need to keep an eye on. The yuan is a barometer of Sino-US tensions and has recovered a little more than a week low, but kept the weak side of the 7 per dollar mark. However, dollar gains were limited, with the greenback barely lifting from a 4-month low against a basket of currencies sitting at 94.93. July, so far it's worst against the euro since January 2018, and the weakness is fanning out across the board. Caution another dollar softness helped the safe haven Swissy. U.S.-China ties have worsened sharply this year over the issues ranging from coronavirus, telecoms, gear maker Huawei, to China's territorial claims in South China and the clampdown of Hong Kong. The U.S. State Department said Chinese mission in Houston was being closed to protect American intellectual properties and Americans' private information. Chinese state media said on Thursday that the move was a political ploy ahead of the November election, and one source with knowledge of the matter told Reuters that China was considering closing the U.S. consulate in Wuhan in response. City analysts expect some kind of China's reply, but they do not think it will derail the trade deal, which is the main focus of the markets. We think phase 1 trade deal is likely to hold on into the U.S. election, and the market may shift attention into China's relative economic outperformance, said Johanna Chuao, city strategist in Hong Kong. South Korea slipped into its first recession since 2003. That's going to be it. Not any real significance. And just seeing if there's not seeing anything. The morning bid hasn't come out to give us a kind of like an overview of equity markets. Nope, nothing yet. So what we'll do is we'll just move into the analysis. Okay, let's go start. Okay, starting with the euro. The euro continued its upside surge, tagging 116. Resistance level is 1608. Let's see that here. With a bias chart resistance for Thursday at 1625. Support will be 1522. Ooh. So cable posted a hanging man on Wednesday. We talked about that. You can see it right here. On Wednesday, as resistance level 2742 was tagged. Bias chart resistance remains at 2788 with support now at 2602. And let's go move into the Aussie. This thing is something else. So the Aussie closed at new highs, although forming a gravestone doji, which pauses or which places a caution light for bulls. Resistance will be 71.78 with support at 70.40. Onto the Kiwi. The Kiwi posted a new daily close, new daily close, or should put a new daily closing high, while tagging resistance level 66.91. We're back there at 66.91 again. You can see that right there. Bias chart resistance will be 67.10 with support at 65.89. I mean, this thing just doesn't go, only goes up. The dollar CAD continues to swoon, approaching support target of 33.82. We had mentioned that earlier in the week, or might have been towards the end of last week, but the 33.82, which will be bias chart support with resistance at 34.72. And this thing continues to weaken. We've actually tagged it already and just dipped a hair below, but it's 33.82 with support at or resistance at 34.72. We may have to move this now down to 34. We'll go with 34.60. So the dollar peso reached support level of 22.17. You can see that there. Before turning up with a mild close, bias chart support will remain 22.17 with resistance at 22.54. And on to the dollar yen. The dollar yen closed higher on the day, suggesting a short-term bottom may be in place. Bias chart resistance will be 758. And boy, we're in a very tight range today. But there was a Japanese holiday with support at 677. But like I said, Japanese holiday, and we're just not moving at all. and support of 758. And the dollar index. The dollar index closed lower on Wednesday. Bias chart support will be 94.55 with resistance at 95.76. So we're giving it some room because we could easily pop higher, but it still remain very, very weak. So once again, this will be all the way up to 95.76. And support's going to be 94.55. And on to the cross rates. Well, this Kiwi yen just continued to advance here. Look at that with the strength on the Kiwi. Um, resistance pretty clear as a bell is going to be 72.02. Boy, this Kiwi is something else. Support's going to be right there. If we do get a pair back, 70.52. And moving on to the euro yen. We had 23.56, but we've gone right through that and pressing up here against this level right there. We've even pressed the stops just a bit. You can see right here is this close right there. That'll mark it right there, which is going to be 24.28. 24.28. Keeping pretty steady up in here. Support will be right there, 23.56. Continue to go on and stay weak here with the euro odd. We did have our low down here at 61.38, but we've even pushed beyond that, although we're trying to hang on. So we're going to put our support. We're trying to do our best. I don't know if it will be able to hang on, but we're trying our best here. You know what? We're just still going to go with. We're going to go with the day's low. Well, not day's low, but yesterday's low, because if the euro does pair back and the Aussie continues to remain strong, we can see this pull back even further. So yesterday was low was 61 even, actually 61.03, and we'll go with that for support. And resistance is going to be this low right there, which would come in at 62.65. We had 62.23. We'll give it some room, see if it can start to fare a bit better. And onto the Kiwi yen. Still faring quite well. with the Euro Kiwi. Still on the relative weak side. Support's going to be just yesterday's low, which is going to be right there at 72.90. Call it 72.88. And this will be resistance to close right there, which is 74.27. And obviously the Aussie yen continues to go in and motor on higher. And that's just going to be right here at this high, 76.80, which we're not even that far away from. With support at 75.94. And on to the guppy. Well, we had 36.34 for yesterday. We've gone up a little bit higher. Have to look at a 2-hour chart. Oh yeah, you can see it right there on the pink line. That's going to be 36.57. And they have put in a short-term double top here on the 2-hour chart. Matter of fact, you can probably put it to right there at 36.43. And support comes in there at 35.70. Let's see, actually right down here, we'll give a little bit of room. 35.61. And we'll wrap up with the sterling odd. Well, we've already made it down here. We had this as a target from about a week ago or 10 days ago, and we just about tagged it. We didn't quite get there, but we just about, which is 76.79, which we did have for yesterday's support. We just about got there, and resistance is going to be right here, 78.60. So no changes there. And that'll do it for FX, but we will take a look here on gold, which continues to motor higher. Look at this, new highs as we are speaking right now. $18.84. Sheesh. think that would even exceed us. 61, 161. And we are still powering ahead. What a move. Pretty good little volume here right there. We are just clipping along. Look at that. Certainly looks like they want to tag 1900. Okay, well, that'll do it for us. And thanks for joining us here in the European crossover webinar. And I'll get the bias chart posted. Thank you.